Is it a screaming value buy or value trap? Hi Team Value, JJ here, welcome back. Well, has Alibaba stock finally bottomed? The lowest price was quite a while ago now, and just recently there's been a small rally, but can it be sustained? The Chinese macro situation doesn't look great, but that doesn't mean the stock can't go on. We'll have a look at a recent article and I'll give my thoughts on the crashed Alibaba stock and where it could go from here. So let's get into it. Here we have a Barron's article from the 26th of April, which says Alibaba's stock is rising amid longest winning streak in a year. But don't be fooled, it says. The debate continues to rage over Alibaba stock. Is it a screaming value buy or value trap? That's the question. Let's see what they have to say, and I'll give my thoughts on it along the way. So they say here, Alibaba stock rose on Friday amid the longest winning streak in a year, but investors shouldn't be too excited, they say. Shares in the Chinese tech giant are still near multi-year lows, with lots of reason for caution, even as the bull case looks exciting. So we'll just have a look at the price action. So we can see here over the last month, Baba stock, that's the US listed stock, is up 8.4%. And it's had a winning streak over those past 5 days, 5 trading sessions. And we can see over the last month, it bottomed there on the 17th of April and it's had that streak. So it's actually up 9.78% so far before this new week starts, before the US trading session starts. You know, it's going on in China at the moment. You know, year to date, it really hasn't gone anywhere. It's up 1% all a year to date. This is the chart for Alibaba stock going back 5 years. And we can see it's down 59.29% over 5 years. However, above the low, which is the important thing at the moment, going forward, is up 19.64% from the low. So we could say that it's bottomed. Has it? Or could it take another dive down with the Chinese macro situation? We just don't know. But at the moment, it's close to a 20% up from the high. But below the high, it's 76.18% below that peak. So it's dropped a huge amount, still way down. So that nearly 20% up is really nothing so far. But has it bottomed? Is it a value trap still? Let's continue with the article and see what they say. So Barron said on this day, shares in Alibaba rose 2% in US pre-market trading on Friday. It ended up the day not being up that much, with the stock on track for a 7th consecutive day in the green. That would be the longest stretch of gain since January 2023. So that is encouraging. When the shares also rose for 7 straight days, so it has happened before. We can see that it's been sort of trading in a channel, hasn't really gone anywhere. But could this be a change? Even though Alibaba is on the up and up, the stock price is still historically low, they say. Having closed just north of $75 on Tuesday, the shares are on the lower end of the 52-week trading range, between 66 and 102. So that's the kind of range, that's the band it's been trading in, with the $60 being in the multi-year low zone. The question is, can the stock finally break out of that? They say Alibaba stock is down more than 75%, as we saw from its late 2020 record high. And late 2020 is quite a long time ago now, so it's kind of been going down for a long time. Declines started in earnest with regulatory pressures on the Chinese tech sector, which I have recorded over the years that I've been doing this, making videos about Alibaba. We saw the crackdowns on tech companies with Alibaba. We saw the debacle with Ant Group and Jack Ma, who seems to be coming back now. I've made videos recently about him doing 2 memos. The last memo was very motivational. He's of course bought $50 million worth of stock recently, and so has Joe Tsai, the chair. Anyway, they go on. So regulatory pressures, which battered Alibaba through much of 2021 and 2022 with COVID-19 lockdowns and a surprise economic slowdown in 2023, 2024 only making matters worse. Was it a surprise slowdown? They were slow to come out of those lockdowns, but the real estate sector and the macro situation isn't looking good, which certainly didn't help Alibaba, of course, being, e-commerce company selling to consumers there. The trouble for investors is that the bull case for Alibaba is so exciting. The company is among the world's largest e-commerce businesses with a strong footprint in the high-growth cloud computing and artificial intelligence space. And as you would have seen, if you've seen my videos before on the earnings, the cloud sector is not growing very well at all, really slow growth. Joe Tsai, the chair, and I'm sure Jack Ma in the background is wanting to accelerate that, because it's really disappointing compared to, if we look at the US tech players and their cloud growth, it's been pretty phenomenal. And so Alibaba will be hoping to do that, to replicate that kind of growth in the near future. Now, if you're getting value out of this Alibaba video so far, I'd really appreciate it if you remember to smash that like button to help the algorithm to spread it to more people. So that's what we want. Thanks. They say by all metrics, the stock is a screaming value buy and technically extremely cheap. But Alibaba's shares have shown themselves to be more like a value trap than a Warren Buffett style value play. And we'll have a look at which super investors own Alibaba as a reminder. Q1 of 2024 filings are about to come out. We're about to see what super investors have either bought it or sold it in that quarter. So that'll be interesting to see. But we'll see the positions of who owns it as of that past quarter of recorded filings. Wall Street remains optimistic, they say. Alibaba stock is overwhelmingly rated a buy among analysts surveyed by FactSet, with an average target price implying upside of almost 40%. But in order for Alibaba to make a real recovery, there needs to be a sustained rebound in the Chinese economy. And that's far beyond the tech giant's control, as China faces headwinds from waning consumption and a distressed property sector. As I've said before, about the macro situation, a sustained rebound in the economy. If we look at the US, what happened coming out of the global financial crisis, or really still deeply in it, if we look at what happened to the stock market, it was March 2009. And if you lived through that period, or if you didn't, if you go and look back at what was happening around the date of March 2009, things looked pretty terrible economically. Things were not really turning up. There was this small glimmer of hope really at that time. And the stock market is forward looking. So the stock market was looking for any kind of upside at all. And that's when it did start to turn up. And, if people had missed the bottom there, it kind of went up quite quickly. But the macro conditions looked pretty terrible for years. It was this really sort of anemic growth, interest rates really low. We kept emergency interest rates for many, many years. 10 years later, interest rates were still low, and then we went into the COVID period and they went to zero. So that was an astonishing period of incredibly low rates. And how long will China take to pull out of it? As I've said before, could it be a Japan situation where, it was 30 years before really things started to look good in terms of the stock market, but they had a real estate bubble and a stock market bubble at the same time, as Jeremy Grantham, a student of bubbles, has pointed out before. That was a real doozy in terms of having both of those at the same time. That's when it's really dangerous. The party was on, and then the massive hangover lasted for a very, very long time. Could China be like that? Or could it come out of it relatively quickly like the US did? Well, the stock market anyway, the economy took longer. And of course, that had a lot of consequences in terms of interest rates and other macro factors. And the housing market took a while to come back. Could it be the same in China? They continue. Many of the short-term rallies for Alibaba stock have come on whispers of Chinese government stimulus, with the stock often pairing gains as reality sinks in or Beijing tempers expectations. So there's this talk of bazooka stimulus, which hasn't really appeared. They have taken steps, but really not really seeing the huge stimulus there. But of course, interest rates are coming down, as in other countries they're going up. Another example came this week amid signs the People's Bank of China, the central bank, could engage in bond trades, which may be seen as a precursor to quantitative easing, which is accommodative and stimulating monetary policy. So we'll see if that happens. We did see that in the US, of course. We know that they would do that. If it was a situation, they'd do that. They'd do a lot of that. China's been holding back a little bit from that, but we'll see what happens. Given the real estate sector disaster that's been happening there, a real crash after quite, elevated levels. However, the PBOC has clarified that its plans to start trading government bonds are aimed at managing interest rate risk, not conducting QE, a China economist at research firm Capital Economics wrote in a note. This reinforces our sense that large-scale monetary easing remains unlikely. Huang added, noting signs of waning off-budget fiscal activity. This poses a threat to this current cyclical upturn in growth, the economist said. Investors intrigued by Alibaba's hot streak should take note, he says in this note, in this article. Could the short rally be sustained and the bottom of Alibaba has passed? The very bottom was quite a long time ago now, so we probably could say that it's bottom, but we just don't know that for sure. If we see a sustained run, any signs that the macro economy is picking up, and of course in the fundamentals of the company itself, which is important, the results will be coming out soon. I'll definitely have a look at that. Any signs of growth there, and Josiah, the chair, and Jack Ma have been pretty motivational and pretty keen to see it more growth coming. If that cloud sector picks up a little bit out of low single digits, that could be encouraging. And of course, there are some sectors that are growing well. The international and logistics units are doing well. It's just the China e-commerce. If there's any uptick in that could be a good sign. And of course, they're buying back shares. When the share price has been this low, they're buying back and increasingly buying back, and they've got a lot of cash to do that, reducing the share count. And if the growth picks up, then there are good signs there. It won't be a value trap forever, you'd think, but we'll have to see what happens. Now let's have a look at what other investors are doing. So other super investors who own the stock. Now here we go, quick reminder, a quick look at this. We can see that Charlie Munger is the only super investor who's come out with results in the last quarter. And of course, he is dead now. So this is posthumously. This is the Daily Journal Corp, who seem to be selling down the Alibaba shares and other shares that they held as well. I wonder if Charlie Munger would be doing that if he was still alive. I would say probably he wouldn't be, because he's known to hold for a long time. I doubt he would have sold down 35% of the shares, but we just don't know that. We have no idea. Daily Journal is always pretty much first to come out with results, and we're waiting to see whether these other investors have bought or sold. But Michael Burry, of course, famous for the Big Short, he added 50% to his Alibaba stake in that past quarter. David Tepper, another well-known investor who's done incredibly well over the last decade or more, he added 20.83% to the existing holding. Howard Marks, a well-known investor who likes to go in distressed situations. So he said in an interview about China, when people have said it's uninvestable, that's when his ears prick up when he hears uninvestable, and he went in, or his firm went in and bought some Alibaba in Q4 2023. Having said that, there are these other investors who have sold down. Will it work out? We'll have to see. What do you think? Do you think that it's going to go well? Do you think the bottom has been reached and it's all uphill from here? It is always a roller coaster, up and down. Of course, there's no straight lines in investing, but do you think that Alibaba has bottomed and that things will go up from here? It's certainly been on the down for a long time now, and then trading in that channel along the bottom. So will it turn up, or will we continue to see this bottoming out process that could go on for years? What do you think? Let me know in the comments. I'd be really interested to know what you think about this. Now I've got some news about the Art of Value Patreon. Just over the past few days, I've started a new tier, the Value Supporter tier, which is only US $1.50. What's included in that tier? Well, it's being a kind supporter of the Art of Value is the main thing. If you like the content that I'm producing here, to show your support, you could pay $1.50 and also get some bonus content as well, at least once a week. I do an investing roundup for the week, my thoughts on the week, my candid thoughts on the week that I wouldn't put publicly, and I will share some of that with value supporters. And of course, you could join as a value angel and get the full bonus content. So if you're interested in that, I'll leave a link in the description. Now, if you want to see more episodes that I've made recently about Alibaba, I'll put some links in the description. And if you're watching this on YouTube, I'm going to put a link here to what YouTube thinks that you in particular should watch next. So go and see any of those now if you want to. And thanks to everybody for watching or listening, whichever platform you're doing that on. And I'll see you in the next one.